Welcome to this episode number 37 of Your Next Trade, so called today ARM IPO. I've been pretty lazy over the summer. I had a bit of Dolce Vita in Italy, and then, the market was a bit quiet with low volume in August. So I wanted really to take a bit of a step back. But now that we are back in September, we are looking for a market that is having more catalysts going forward. One of them is the ARM IPO, which will be happening around mid-September. So ARM IPO, which will be between 50 to 70 billion market cap. SoftBank, which is the biggest shareholder, is very keen on actually the overall IPO, obviously, to be doing pretty well. So this is a semiconductor company. We do know that very often SoftBank is pretty aggressive in those IPOs. So we're going to be seeing a lot of headlines around the sector, the semiconductor. So despite all the noise that has been ongoing into the artificial intelligence and semiconductor, looking at the chart here, which is going into the SOX index versus the S&P, as you can see, we have not been making new highs. The sector has been extremely strong since 2016. So if you look at NVIDIA, this is very much the chart of NVIDIA since 2016 or early mid-2015, where really strong based on new servers, artificial intelligence, a lot of intelligence going into our cars. So pretty much very, very strong since 2016. But as you can see here, we have been consolidating. So I'm looking, as always, as a trader, as new catalysts. So this is going to be for mid-September. SoftBank, all the banks will like the market to hold pretty well for the next 10 days, at least, to make this IPO pretty successful. So let's look, as always, starting with the year-to-date asset performance. The picture is more or less the same, looking at the blue for stocks, with S&P up 17%, Nasdaq 34%. Europe has been giving away back of its performance, so these indexes used to be up almost 20%, but Europe is slowing, as I've been telling you for quite some time. PMI, services, manufacturing has been struggling. So at best, the European economy is flattish, but I think there is a small recession at least coming. So Europe struggling. If you look at Japan 25%, but some of this outperformance of 25% is explained by the weakening of the currency, the reason being the differential in rates between Japan and in the US. Crypto, still the same. Currencies, euro dollar now flattish for the year, but has been stronger versus the most other currencies. Gold, WTI up. WTI, this is one of the catalysts that we're going to be looking at going forward. $85 now, which is mostly explained by the cut of supply from Saudi and Russia. So Saudi from 3 months ago versus 3 months ago cut production by 1 million. Russia almost by 500,000, so that's 1.5 million versus supply that was on the way up by 500,000 in Iran. So you have a differential of 1 million of supply barrels every single day versus 3 months ago. In the meantime, demand is okay, despite China not firing up on all cylinders. But in a normal world, in normal economy, from 1 year to another, you should expect oil demand to be up by 1% roughly, except when you have a major crisis like we had in 2008, 2009. So that means that explains the surplus going into deficit now and why oil is at 85. So going forward, this is really a catalyst, not only for IG generation through the XLE, through the oil majors that have been doing pretty well this week. So if you look at Europe, oil majors were up 2 to 3% at least, and they are making new highs. We are talking Total, Eni, Y as well. We had a nice upgrade double upgrade from Morgan Stanley. but with obviously there is a correlation with WTI. So this is one of the space that I'm looking. If you look at copper, Dr. Copper for China, for instance, is still flattish and not doing much, and that's the same on the week-to-date performances. What is the picture telling you on the week-to-date? For at least this week, this is a risk-on story with indexes, stock indexes up 2 to 3%. So pretty strong market for stocks. Currencies, FX, pretty flattish. We had some volatility in between, but really August was a month we had very low volume. We had a bit of a jump in volume on Thursday, especially at the close and in the last few minutes because of the index rebalancing for the month, but as well some MSCI rebalancing. So a bit of technicality, but really after Labor Day, that's going to be on Monday, we should start to see volumes and activity picking up again. WTI, as I said, very strong, 85, up 7%. So really this is one to watch for the inflation for your 10 years, for the US consumer. My view is still the same. I've been giving you this macro call, which is, for Q4, I think the US consumer will be struggling as they will be running out of reserves that were built during the COVID. Both due to fiscal stimulus and monetary stimulus. And this slowing down of the US consumer plus WTI is $85. So if you look at the year on year, if you stay around 85, that's not good for the CPI. And the PPI, I think with an US economy that is growing 1 to 2% versus, on average of 3%, that doesn't give you much room. And I think, we could have some issues going into Q4. This is still the same picture for me. Year-to-date industry performance, looking at the S&P that is here versus the other sectors. So many sectors industry underperforming versus very few names that are outperforming. So the winners have been really about winning. So if you look at technology, semiconductors, media, home builders, those names have been doing very, very well. So if you think that the S&P is here, you can see the differential of those sectors really outperforming. Other end of the spectrum, the bank, similar picture that we started in March, April, have been struggling. Utilities, why? Because yields have been going up. Week-to-date industry performance here, we are looking at the S&P roughly here, and many names actually for the week doing better than the S&P. If you do a bit of filtering down the way I do it every single week, not necessarily the best quality. So the big names, the FANG of this world have been doing a bit like the S&P, so not really outperforming, but many non-profitable tech, very heavily shorted stocks have been outperforming the market, which can be explained by the quiet tape, where it's much easier to be making those stocks on the way up. Sectors performance, looking at the year to date, utilities are down. Otherwise, roughly all sectors are flat to up, with IT, consumer discretionary, and telco outperforming. The telco is not the pure telco. It's there is a bit of misleading number here because there is a lot of Meta into that number, and as Meta is up 100% for the year, that is a bit distorting the numbers. The week to date utilities, why? Because the 10 years is not helping. Energy very strong, IT very strong. What about the rates? I'm looking at the US 10 years and the other 10 years first. So we are at 4.18 on the US 10 years. Actually a bit of volatility yesterday after the NFP number. So we started the day at 4.10%. We went down to 4.05 30 minutes after the NFP, and then when the stocks opened, we went literally from 4.05 to 4.18%. Different reason. One of them is obviously there is low liquidity, so it's the same as any asset classes. With low liquidity, the market could be and are moving more quickly than usual. So we are hoping that September will be bringing a bit of liquidity into the market, but as well because there is some expectations that it's not coming from me, but that there is a lot of expectations of new emissions, new paper, more paper coming from the bond market in September onwards. So when you have more supply coming from the US Treasury, from as well companies, because it was pretty quiet in August, now that people are back into their desks, that investors can roadshow and see people keen on buying their paper, actually this is you need to be matching this high supply by putting yields higher. And this is what is happening. So there is so much paper coming every single day, every single week, that it's hard for the yields to go much lower. 10 years versus the 2, we had 70 bips, a bit of steepening, a lot of noise in the macro space, especially on Twitter. I'm not smart enough. I'll leave you make up your own decision. But more noise than really something happening here. Fed fund rates these days at 5.33%. So I'm interested in two things. What is the picture until the end of the year? So as you can see, comparing it with 5.41, not much expectation. So the Fed is probably done in terms of hiking cycle, unless we're going to have, as always, a positive news or a negative news. But for the time being, September, probably the Fed is not going to do anything and not going to be hiking, at least what the market is pricing for the next 3 to 4 months. I'm interested is what's going to happen in 2024. So December 2024, looking at the 4.32 versus my 5.33, that is minus 100 bips. So that is minus 1%. So the market is expecting from the Fed to be cutting rates by 1% between December 2023 and December 2024, which could be seen as lower inflation and as well could be seen as, the economy not firing on all cylinders. So as always, some bull case, some bear case. Bull case because, you can argue that the Fed is down and they're going to be cutting. On the other hand, the bear case, which is, is the economy going to be as strong as before and could we see a recession? So this is for the Fed fund rates. Now looking at volatility. Now the VIX at 13.5%. What has been interesting, something that I flagged, and we're going to be talking later about it, is since the option expiry that we had on Friday, the 18th of August, where the market, sold off into the expiry, we managed now since then to bounce. So volatility has been smashed, and in the meantime, stocks have been going up. It's very similar if you've been trading the market, something that I mentioned in the past in 2017 of this everyday selling of volatility, which is explained by inflows going into those specific products, which are mostly about selling volatility. And as well, normally in August, you have lower volatility because, this is a calm season, this is holiday season, except, if you are looking at 2015. But really, the story is volatility close to new lows. Both the implied volatility and realized volatility is coming down. Now I'm interested in going into the technical analysis, starting with the S&P futures, and I'm going to be giving you a weekly chart. So the trend is the same, which is we are halfway to the range that we started in October, so we are going up after the consolidation. So different levels. We keep in mind that we get one of the biggest expiry in 2 weeks now, with the third Friday of September. So this is an important expiry. There's going to be tons of open interest. And as well, I'm interested in the 46.65 level of the JP Morgan collar, which is the sell of the call, and the buy of the put at 42.10. So you do know or don't that over the last few years, the market has been challenging some of those levels of the collar. So naturally, it feels very much like if we carry on like this, the 46.65 is a magnet to go. NQ, looking at the NASDAQ, Nasdaq is the same, very much. We have not been making new highs yet, but the momentum has been pretty strong in 2023. For the Russell, different picture, consolidating for a year now. So the small mid companies have been hurt more than the big companies, both because of the cost of money, which is more important for those small and big companies, but as well because the US consumer versus the other consumer. So that gives you the picture of the Nasdaq versus the Russell. We have been consolidating. So many stories where since June, a market is looking for new drivers. This is true for the FANG versus the S&P. Apple has been doing pretty well, actually, since I'm going to switch into a daily chart, since the earnings. So we had the earnings that were here. The stock gap down, came down. I think they have been extremely aggressive in buying back some shares since then. We almost fill the gap now after the earnings. They have this big a new iPhone launched. I think it's the 15 now. I don't even know which number that is. So they're going to try to sell us, a fantastic iPhone that is exactly the same as before, but like for $200 more than usual. And obviously that creates some noise, but so far not much of growth for Apple, at least in the numbers. Interested in emerging market. Why? Because it's 50-60% China, and actually emerging market has not been doing that bad recently. So there's a lot of headlines about China doing very, very badly. And the price action is a bit different from what we see. So always be careful of, what is the headlines on CNBC, Bloomberg telling you, and actually how the prices have been doing. JP Morgan, actually interesting. It has been struggling since the earnings. So that is really something that I'll be watching. If you think that, like me, that JP Morgan is really a big market driver, market leader, it is at a level that has been, testing the lows of August. So really, I'll be watching. If it goes below, I think the market will be struggling. Europe through the stock 600, I've been telling you for quite a long time now that I'm short. The story is still the same. I think Europe is struggling. At best, it's flattish in terms of GDP. I think it's in a recession. DAX is the same. But overall, the flows feels very much like someone is leaving the floor. CL1 for WTI. So one to watch. We made a breakout this week above 85. Not only for XLE, for the oil sector, but really a sector to watch, because that will impact, as I said, the US consumer. That could impact inflation. That could impact the central bank's policy. Copper trading sideways, not strong. So different picture, because really CL1 is mostly about supply and demand, and more specifically bit force from supply coming from Russia, and more importantly the Saudis. 10 years 420, we already discussed that. Euro dollar trend has been pretty negative, as you can see here. Let me try to do a funny so something around this. You can see the trend here really trending down. The trend is your friend so far. Dollar has been pretty strong, not only through the 10 years, but the macro numbers have been better. What if you look at the CT group surprises from the US, a bit better, even if they turn in August. So I think in terms of good news, we have been peaking in the US, and actually the market, at least for this week, has been doing good on bad news. Not necessarily very bad news, but not so great news. And those not great news, when bad news is good news, is mostly because market is pricing more and more the end of the hiking cycle from the Fed, and the Fed to be more accommodative. So that was true from the NFP numbers to the PMI, just saying, numbers are kind of okay, not beating or a bit lower, so market like it. In the long run, and I think very quickly, actually, what's going to happen from October onwards, the market will start to freak out and saying, okay, actually, this is not even bad news, is really, really bad news. And that's going to be affecting EPS. This is still my scenario. I'm sticking with it. Dollar yen. Similar as something we discussed over and over. As long as you get the US 10 years at 420 and the Japanese 10 years at 60 bips, and you get so much of a differential, people will be selling the Japanese yen. Going back now into Excel and looking at what happened this week, starting with the S&P as always. So we had a bit of a move up. So that was on Tuesday because we had some jolt numbers, some employment numbers which were below. So again, market was more or less saying bad news is good news. Fed is going to be more accommodative. What about we buy stocks? But really the story is here, which is the story of August, where if we look on the top, which is the VIX, and at the bottom, the S&P futures from the 18s, which are here, which was the option expiry, we picked on the VIX, and since then we have been selling volatility, which has been helping what we call the vol control, or funds that are invested in volatility. When volatility is coming down, they'll be putting more money at work, and you can see really it feels like this is almost like a VWAP order, selling volatility every single day. Volatility coming down, and in the meantime you get stocks going up. So we had end of the month, the volatility crashed. We get the bad news is good news. NFP were kind of in line. GDP at plus 2% in the US, roughly. A bit of index rebalancing, as I said, on Thursday. And we had as well the ISM manufacturing, which is here, which is at 49% for the global PMIs versus 48.6. From July, so more or less the same. Manufacturing picture is the same. So we are in contraction. Something to watch would be the ISM prices, which started to tick a bit higher, not on a month-to-month, but versus the lows that we had. So prices might be stabilizing. But more importantly, we'll be looking at this week of the drivers, looking at the PMI services. So we get the PMI services starting on Tuesday in Europe and then on Wednesday in the US. We do know that the ISM services in the US has been slowing down, still above 50%, still growing, but feels very much like now the services are catching up with manufacturing. So if there is confirmation, I think the bad news is good news could slowly but surely going into bad news is bad news, because so far what has been helping the market is obviously earnings being pretty strong, or at least keeping up, but that could change very quickly. I mentioned the bond supply. That is affecting. We get the roadshow, we get people coming back into the office, to the desks, and companies that need to roll and have access to the credit market. I'm very, very much looking at the ARM IPO. So the pricing will be in 10 days time on the 13th, and then normally the listing should be on the 14th. So very important for SoftBank, very important for semiconductors, for the risk-on space, for private equity, for a lot of players. So they want, the bankers will like to have a nice IPO. Very often what happens is you price it, perfectly. Everyone is looking at it, and when it's done, it's almost like the top. So I'll be really watching the space, SoftBank, the ARM IPO. I'll be watching NVIDIA, and I'll be looking at what is the company saying during the roadshow. In terms of seasonality, most of you will know that September is a bad month for equities. It's true for the S&P, for the Nasdaq, and in Europe as well. That is pretty much flagged. So September is a bad month. So don't be surprised to see bad seasonality. As I said, another catalyst that I'll be looking is how the volatility is going to be doing going forward with the VIX is not a perfect product, a perfect indicator, but at 13.5%, it tells you that volatility has been crushed. It's true as well for realized volatility. And if you look at the S&P weekly straddle, I do know that here the market is closed in the US because of Labor Day, but 1% expectation of a move is a level that we haven't seen for a very, very long time. So numbers pretty low in terms of volatility. ISM services Tuesday and Wednesday in the US. Bank of Canada on Wednesday, not much expected. In terms of macro, we are pretty light. We have some Fed speakers from Wednesday onwards, so they will tell us, what they think about inflation. That's going to be interesting because we're going to have the FOMC meeting later in September, even if the market is not expecting that much of a change. In terms of earnings, which is here, we don't have much. Okay, so we got Kroger on Friday, but more importantly, when we are between earnings season and the earnings closed, let's say 2 weeks ago, we are looking at conferences. So if you get positioned in one stock, in one industry, make sure to check, when, if on any single day a company could be talking, not only for your industry, but any market movers, because I'm pretty sure that in the next 2 weeks, we're going to see a lot of headlines of how companies have been doing, how do they see going into the retail season. That's going to be very important. So watch for the conferences. And finally, here I'm looking at the XLE. So this is for here. I'm looking at the XLE, which is for the oil services or energy sector in the US, not far from making new highs. Market is looking for new drivers, new leaders. Is the energy sector will be a good news for the market. That will mean that WTI is much higher, meaning that there is inflation, that it could impact the 10 years as well. So those are the kind of drivers I'll be looking. ARM IPO is very important to see, what is the mood of the market of putting new money at work, of the noise that we had around artificial intelligence and semiconductors over the last 3 to 5 months. Keep in mind, that's my sarcastic way of doing things from time to time, is this is a SoftBank story. Be careful always with SoftBank, when they are putting money or are putting investments, selling you investments in the market. Very often that could be seen as some topish. And this is why, I think the NVIDIA of this world have been holding so well, because not only Wall Street, but many players would like this IPO to be doing well. So this is it for me today after 2 months of not doing much. So if you are interested in education, story is still the same. The 4x4 video series, you can go into the website. You can subscribe either for 2 months or 12 months. There is the mentoring, which is one-on-one sessions that I do online with you. It's 12 sessions. It works very well. We're going to do for the people that are on the Discord community, on the most advanced Discord community, we're going to be doing, as promised a month ago, group mentoring session. So probably at the end of this month. If you're not on the trading community, you should be joining. There are some free channels. If you already subscribe to the 4x4, if you've done the mentoring, you will have access to more channels. And finally, if you like what you've seen today, that'd be great to see you more often. Put a like, subscribe to the channel, and feel free to send me an email or DM me if you got any question. This is it for me today. As I said, after Labor Day, normally the volume will be picking up. So far, over the last couple of weeks, have been pretty quiet in terms of volume, but we should see more activity and more news going forward. I hope you enjoyed. I see you next week. All the best. Bye bye.